language that I've been taught when I was at school. I'm an investor, a business owner, and a money educator. Understand it better. Compound interest, cash flow, budgeting, investment, recover from debt. No one explained to me, put your money to work. It's about normalising the conversation. Welcome to the Money Mechanics podcast. I'm Sarah Poynton, investor, business owner, and money educator. And in this episode, we are going to be talking about mortgages. So this actually came in as a question from one of our listeners. What is the difference between an interest-only mortgage and a repayment mortgage? And actually, it's something that I absolutely take for granted because I've bought and sold houses for nearly a decade. But in fact, slightly longer than that, since 2007, which is when I bought my first property. So this is something that comes into my life all day, every day. And I'd taken for granted that actually people that haven't ever bought a house don't always know the difference between what interest only means, what the repercussions of interest only means, and what repayment means and what the differences are. So I thought, actually, let's do an episode on this to just explain the differences and let you have all the information you need to make an educated decision as to which one's going to be the right one for you. So what is a mortgage, first of all? Now, I talk about this a lot in the book. Mortgage, if you go right back in history to what it really means, translated, it means death pledge. Mortgage, death pledge. Now, a death pledge means a lifelong commitment, a lifelong debt. Move forward to 2024, what a mortgage actually means, it is usually a 25 to 30 year loan for buying your residential property. Now, you can always also get mortgages for buy-to-let property as well. So if you're an investor that wants to buy houses and rent them out, you would get a buy-to-let mortgage. But for most of you who are getting started in property, really getting on the housing ladder is the first step. So it's that mortgage on your first property. It is going to be the one thing that you pay for most of your life. It's the one debt that runs for a big chunk of your life. And yet we actually do thrive on being on the housing ladder. We want to own property. We want to have a mortgage. It's really hard to get a mortgage though if you haven't got one. And you know, the more the cost of living goes up, the more that interest rates go up, the harder it is becoming. So there's two different ways that you can get mortgages. And often what happens is, in order to get access to a mortgage, people start with an interest-only mortgage, because with an interest-only mortgage, instead of paying the actual debt, all you're doing is servicing the loan. So you are paying the borrowing cost of your loan. You're paying the interest only. So the interest, in the last episode, we talked a lot about what an interest rate was, what the Bank of England interest rate is, and what that actually means to you. So if you haven't listened to that, make sure you get your ears around that episode, because it will help you understand it a lot deeper. So a mortgage, an interest-only mortgage, means that let's say you've borrowed £200,000. You will have an interest rate attached to that loan. When you get an interest-only mortgage and you're paying your monthly payments, that payment is going to servicing the interest rate only. You're not actually paying back that £200,000 initial debt that you've got. So for 25 years, you pay interest only, or 30 years, you pay your interest only. The problem that people have with this is they get to the end of that 30 years, and because they've only ever paid the interest and not the capital, the actual debt, they still owe £200,000 at the end of that loan period. And actually, this is happening a lot in our market, where people didn't necessarily understand that and realise that. And they get into the end of their products and they're having to find big chunks of money or sell their homes to be able to repay their loans. So an interest-only mortgage is for the entire term that you are paying, you are only renting the money. Right? You are paying rent on having that money. That asset, that property that you've bought with that loan, still belongs entirely 100% to the bank, right? So the difference between that and a repayment mortgage is that with a repayment mortgage, the payment that you pay every single month, a big percentage of that goes to your interest, and a small percentage of that goes to repaying the actual loan. So let's say the same £200,000 loan that you've got to get your property, your interest, which is the cost of the borrowing, you pay that, And you also pay down some of that 200,000. So when you get to the end of your 25 years or your 30 years, you've paid all your interest, you've serviced the debt, and you've paid back a loan of 200,000, which means on the end of your product, you've got the keys to a house that you own 100%. You are what's called mortgage free at that point. Now, a lot of people have a goal in their life to become mortgage free. There's different schools of thought on this. So for some people, actually, and I talk about this a lot in the book, so you should definitely grab a copy of the book and read the chapter on leveraging other people's money. It's not for this episode. We'll talk about it on another episode at some point in the future. But there's a chapter on this in the book. So people want to be mortgage free, but what actually happens when you're mortgage free is you've got £200,000 of your money, your equity, tied up in bricks. You can't really do much with it. So what happens a lot of the time is we refinance property and we move our money around so that we can do different things. But like I say, it's not really for now. It's not really for this episode. Read the chapter in the book on leveraging. So coming back to the main differences between interest only and repayment mortgages. Interest only usually has lower monthly payments, which is why so many people choose it when they're getting on the housing ladder at the beginning, because it is more accessible, right? Because you're paying just one part of it and not the capital debt. It means that your monthly payments are going to be way less. With a repayment, you're going to have higher monthly payments because you're paying both the interest and the debt. Right? Now, at the end of the mortgage, again, this is really important detail. At the end of the mortgage on an interest only, you still have to find the money to clear the debt. With a repayment, you own the house completely. Now, one of the things I definitely suggest that people listening to this podcast do is speak to their parents about whether they are on interest only or repayment mortgages. Because I know I've worked with clients before that have said to me, well, we always thought that we would inherit our parents' house because, you know, they pay their mortgage, they're paying it down, and we've been told we'd inherit it. But they've misunderstood. And actually what's happened is they've got to the end of the term, they've been paying interest only, they haven't had enough money to clear the debt, and they've had to sell the home to be able to repay the bank. That means there's no inheritance left. Now, it doesn't happen often, but it's definitely happened, and I've definitely spoke to clients about it. So, you know, to some people, it might seem obvious that you actually, you know, you understand this stuff, but to others, it's not so obvious. So just speak to your parents, just check which is which. Now, there's pros and cons to both, of course. You have to decide what is going to make sense to you. So, you know, lower monthly payments means it keeps your costs down, but the higher monthly payments, the repayment, is going to give you a bit more flexibility in the rates that you're going to get, the borrowers that are available to you. You know, there's all these different pros and cons to it. I think with interest only, the benefit is you can make your money go further. So actually, let's say that your repayment mortgage would be £800 a month and your interest only mortgage would be £500 a month. Well, that difference of £300 a month, you know, you could invest that into other things. You could maybe invest that into the stock market or a fund or, you know, something else completely. It gives you the ability to diversify a little bit more because you're only paying a smaller amount each month. But actually, if what you want to do is be left with a house at the end of it, and that's your strategy, that's your investment plan, you need to make sure you pick repayment because that's what's going to create your wealth over time, right? Now, choosing a mortgage that's right for you, I've just written a couple of notes on here to really help you to figure this out. I am not a mortgage broker. There are exceptional specialists in this category. What I'd say when you're looking at picking a broker is you want to work with somebody who's got access to the whole of the market. Now, when you go to Barclays or Santander or TSB, they are going to offer you Barclays or Santander or TSB products. What they're not going to do is look at the whole of the market and say, well, actually, if you went with another lender, you'd be able to get lower payments, the interest rates are a little bit lower, you can get a slightly extended term, there's no arrangement fee, the penalties are less. They'll be able to help you and really advise you properly. If you bank with HSBC, you don't have to go to HSBC to apply for your mortgage. And I hear this a lot where people say, well, I just went to TSB because I bank with TSB and they said that this is the mortgage that's available to me, so that's the one I went with. I would absolutely recommend that everybody gets a broker that can represent them and go and find the right lender for them. And if anyone needs an introduction to a broker, by the way, just drop me a comment, send me a message, wherever. I'll send you the details of my broker, who's excellent. Having a broker that can help you find the right mortgage for you is really, really important. You can say to them, look, what we want is low payments. We want to be able to spread our money. We want to be able to have that plan in place to have that loan paid off at the end. How do we do that? And they can help you. Or you could say to them, do you know what? We're actually happy with higher payments. I don't want to have to worry about thinking about where the money's going to come from. We just want repayment. And they'll be able to go out and find the right product for you. So I'd recommend highly that you go and get yourselves a really good broker. Now, with brokers, sometimes you have to pay in advance for a broker and sometimes you pay at the end. There's no right or wrong. It just depends on how they run their business. In my experience, brokers that I've paid at the beginning tend to work harder for me. That's not to say that brokers you get paid at the end don't work hard. They do. It's just what my personal experience has been. You need to figure out what works for you. But there's, often I get messages saying, is it a scam if my broker is asking for a fee up front? Absolutely not. That just might be their business model. Being a broker is a lot of work. They have to do a lot of due diligence on you. They have to do a lot of digging around in the market. They have to do a lot of research. There's loads and loads of work that goes into it. Some like to be paid in advance for that, so they definitely get paid. They might have staff to pay, offices to pay for, stuff like that. Some of them don't necessarily do that, but find the one that works for you. And then I think the key to this is looking at all of the options and working out what is going to be, in the long term, the best solution for you. What I can also tell you is that when you pick a mortgage today, we're talking about 25, 30-year products, but it's usually tied in for the first 2, 3, 5 years. You're not usually tied in for 30 years. So after the first couple of years, as the market moves around and interest rates change and the value of your property changes and your circumstances change, you might get a career, pay rises, you might end up moving in with a partner. There's all different things that happen. At each chapter of your life, you can refinance your properties. So you could say, well, 5 years later, you bought a house today, you got the product that was right for you today. 5 years down the line, you might be earning more, you might be living with somebody else, you might have kids now, but there's all different things that go on. You find the products right for you then, and what you do is you refinance. It's called remortgaging, refinancing, where you get a different loan, which pays the loan off that you've got currently, and you move from, let's say, Santander, who's your original loan, you move from Santander to Barclays. You utilise the loan from Barclays to pay back the loan, and you're now on a new product with different rates, different monthly payments. And it's really important, regardless of whether you've got interest only or repayment, that you keep an eye on the dates, because in the first instance, what will happen is you'll go on like usually a fixed rate for a period of time, and then it will go on to a variable tracker rate. And the variable part is where it's unpredictable and you don't really know what you're going to be paying, because it tracks the Bank of England base rate, which we talked in the last episode. So to conclude this, you need to find a broker, work out what you want long term, whether you want to be left with the keys to a house that you own fully, or whether actually you just want to service the debt and have a house at the end that you give back to the bank because they own it. You don't have to give it back to the bank because you can refinance as you move things forward. You need to decide what's right for you right now, what's right for you for the next couple of years, and then you can look to change that over time. My name's Sarah Poynton. This has been the Money Mechanics podcast. If you're watching over on YouTube, please make sure you subscribe and hit the like button. It helps me to spread the word. If you're listening on audio only, make sure you leave me a 5-star review so that we can spread the word over here as well. I've been Sarah Poynton. Thanks for listening.